Florida's condo market isn't just cooling, it's imploding in a way no one saw coming. Prices aren't dipping by a harmless 5% or 10%. We're talking collapses of 25%, 30%, even 32% in once red-hot cities. Families who bought at the peak in 2021 are now drowning underwater, watching hundreds of thousands vanish overnight. Retirees face $10,000 insurance bills, surprise $40,000 special assessments, and condos that no one wants to buy. Inventory is piling up like a tsunami, with thousands of units rotting on the market. What was once Florida's sunshine dream is now a financial hurricane destroying wealth at record speed. Number 10. Sarasota. Sarasota, the Gulf Coast paradise once celebrated for its art scene and white sand Siesta Key beaches, is now showing cracks beneath the glossy postcard image. Condos that just 2 years ago fetched $600,000 are now struggling to sell at $420,000, a brutal 30% haircut that rattled both retirees and investors. Inventory has surged over 65% year over year, flooding the market with units as sellers race each other to the bottom. A median two-bedroom condo that cost $480,000 in 2022 is now hovering closer to $350,000. Yet even at those levels, buyers are hesitant. One of the main drivers of this collapse is the skyrocketing HOA fees and insurance premiums. Many older high-rise buildings now require costly structural repairs, and special assessments have blindsided owners with bills in the range of $20,000 to $50,000 per unit. Add to that Florida's notorious insurance crisis. Policies for waterfront condos that once cost $3,000 annually now exceed $9,000. These costs alone push monthly carrying expenses above $1,200 before a single mortgage payment is factored in. That's a nightmare for retirees living on fixed incomes and a deal-breaker for cash-strapped buyers. Rental demand hasn't been enough to save the market either. With oversupply of short-term units and stricter city regulations, rental yields are falling below 3% annually, a far cry from the 7 to 8% investors demanded to justify risk. Price cuts are everywhere. Over 40% of listings in Sarasota show reduced prices, and luxury towers downtown that once sold out pre-construction are now half empty, with developers slashing prices by $100,000 or more per unit. The shocking part? Sarasota was one of Florida's hottest markets during the pandemic boom, seeing prices soar nearly 50% from 2019 to 2022. Today, it's giving much of that gain back, and experts whisper this could just be the beginning. For condo owners banking on endless sunshine to preserve their wealth, the storm clouds are now financial, not tropical. Number 9. Bradenton. Bradenton, tucked between Sarasota and Tampa Bay, was once a quieter alternative to its flashy neighbors. But today, its condo market looks like a battlefield. Prices that peaked at nearly $400,000 for a median two-bedroom condo in 2022 are now slipping under $280,000, a staggering 30% plunge. Inventory has ballooned by 70% year over year, with more than 1,500 active condo listings in a city that normally carries half that amount. Sellers are desperate, slashing prices by $20,000 to $40,000 in just a few weeks, creating a spiral that keeps dragging the market lower. The biggest problem? Oversupply colliding with affordability. Bradenton attracted retirees and snowbirds, but now those buyers are pulling back hard. Monthly carrying costs have exploded. HOA fees often range from $500 to $900, and insurance premiums that used to cost $2,800 annually have spiked to over $7,000 in waterfront complexes. That pushes monthly ownership costs for a modest condo close to $2,200, even before a mortgage at 7% interest is included. For many, renting makes far more financial sense, leaving units to sit stale on the MLS for months. Investors are running for the exits as well. Short-term rental profits have collapsed, occupancy rates have fallen below 55%, and average nightly rates dropped by 20% compared to 2022 highs. What used to be marketed as a reliable cash flow play now bleeds red ink. Developers who gambled on new projects during the pandemic boom are suddenly holding unsold inventory, and pre-construction buyers are walking away, forfeiting deposits rather than closing on overpriced units. Bradenton's condo crash isn't just about money, it's about confidence. Once viewed as a safe bet, the city is now a cautionary tale of how quickly paradise can sour. For longtime owners, watching decades of equity evaporate in less than 2 years feels nothing short of catastrophic. Number 8. Ocala. Known as the horse capital of the world, Ocala wasn't on most people's radar for a condo meltdown. Yet the crash here is quietly brutal. Median condo prices that climbed to $220,000 in 2022 have since tumbled to around $160,000, a shocking 27% decline. For a small inland city, that's devastating, wiping out the thin equity margins of local retirees and first-time buyers who rushed in during the pandemic frenzy. Inventory is up 62% year over year, with more than 600 active listings sitting idle in a market that normally turns over quickly. The problem is a mismatch between demand and supply. Ocala attracted bargain hunters priced out of Orlando and Tampa, but rising interest rates destroyed affordability. At 7% mortgage rates, a modest $160,000 condo now costs over $1,300 a month, with HOA fees and insurance added, far more than local incomes can support. The median household income here is under $60,000 annually, making ownership feel impossible for many. Even worse, older condo buildings face the same financial hurricane hitting the rest of Florida. Rising repair costs, new reserve requirements, and staggering insurance hikes. Premiums that averaged $1,800 annually are now closer to $5,000. Special assessments ranging from $8,000 to $15,000 per unit are crushing residents who never budgeted for surprise bills. Rental markets aren't bailing owners out either. Long-term rents have flattened, averaging just $1,200 a month, barely enough to cover costs. Investors who thought they were buying cash flow assets are instead stuck subsidizing losses. With fewer out-of-state buyers willing to gamble, condo values are circling the drain. For Ocala, a city that once promised affordable Florida living, the crash is personal. Families who stretched their finances to buy in 2021 now watch helplessly as their condos are worth less than their mortgages. The pain here may be quieter than Miami or Tampa, but it cuts just as deep. Number 7. Orlando. Orlando, the land of Disney dreams, is facing a condo nightmare. Prices that soared during the pandemic to nearly $310,000 for a median unit in 2022 have now slipped closer to $230,000, a gut-wrenching 25% decline. Inventory has exploded by 80% year over year, with nearly 3,500 condos on the market. Many linger unsold for months as sellers slash prices by $15,000 to $50,000 just to get offers. The issue goes beyond rising interest rates. Orlando's condo sector is burdened by ballooning HOA fees, often $600 to $1,000 monthly, and jaw-dropping insurance premiums that have doubled since 2021. A two-bedroom condo near downtown that once cost $1,800 a month all-in now demands over $2,600 with today's fees and mortgage rates. For locals whose median household income is just $63,000, the math no longer works. Tourism, which once fueled Orlando's short-term rental gold rush, has also turned sour. Oversaturation of Airbnb units has driven occupancy rates down to 50%, while average nightly rates fell by 18% since 2022. Investors who banked on steady tourist cash flow are now fire-selling units. Some properties around International Drive are down 30% from their peak as owners flee mounting losses. Even the allure of job growth from tech and healthcare hasn't stopped the slide. Buyers are spooked by rising special assessments tied to Florida's new condo inspection laws, often hitting $10,000 to $20,000 per unit. Lenders are flagging entire buildings as too risky to finance, leaving cash buyers as the only option, and they're demanding rock-bottom prices. For Orlando, the most shocking part is speed. A market that once ranked among the fastest growing in America now feels like it's in freefall. Condo owners who thought Mickey Mouse magic would keep values rising forever are discovering that gravity is stronger than fairy dust. Number 6. Cape Coral. Cape Coral was the poster child of Florida's pandemic housing boom, where waterfront condos once doubled in value in just 3 years. But today, the same market is unraveling at lightning speed. Median condo prices, which peaked at $340,000 in late 2022, are now selling closer to $240,000, a brutal 30% collapse. Some developments along the canals have reported even sharper plunges, with units originally listed at $400,000 slashed to under $250,000 just to attract offers. Inventory has surged by 95% year over year, leaving more than 2,000 condos sitting unsold in a city of just 200,000 people. The financial math no longer works for owners. Insurance premiums have exploded, with policies for waterfront condos skyrocketing from $3,500 annually in 2020 to more than $10,000 today. Add in HOA fees of $600 to $900 per month, and surprise special assessments of $15,000 to $30,000 per unit for flood protection and structural upgrades, and many retirees simply can't afford to stay. Cash buyers once fueled the frenzy, but even their walking away as carrying costs dwarf potential rental income. Investors banking on Airbnb revenue are now facing harsh reality. Occupancy rates have plunged below 45%, while nightly rates have dropped 20% since 2022 highs. A condo that once netted $3,000 monthly in bookings now barely clears $1,600, less than half the cost of ownership. This collapse in investor appetite has turned Cape Coral's condo towers into ghostly reminders of speculative excess. The drama is amplified by Cape Coral's storm vulnerability. After Hurricane Ian in 2022, buyers are wary of flood-prone areas, and new FEMA flood maps have forced many condo complexes into expensive insurance categories. For owners who thought Cape Coral was a forever paradise, the reality is shocking. Condos are worth less every month, and recovery feels like a distant dream. Number 5. Jacksonville. Jacksonville, Florida's largest city by land area, seemed insulated from the condo crash to its diversified economy and growing population. But even here, prices are cracking. The median condo price peaked at $230,000 in mid-2022. Today, it sits closer to $180,000, a 22% drop. Inventory has ballooned by 60% year over year, with nearly 1,800 condos listed, many sitting stagnant as buyers demand deep discounts. The affordability equation is broken. Jacksonville's median household income is about $67,000, yet the true cost of owning even a modest condo has soared. At current rates, a $180,000 condo with $400 HOA fees and $4,000 in insurance premiums translates to monthly costs above $1,700. Painful in a city where the average rent is only $1,400. Owners who stretched to buy in 2021 now find themselves upside down, owing more than their condos are worth. What's especially alarming is the investor exodus. Many out-of-state buyers from New York and California piled into Jacksonville during the boom, hoping for rising values and rental demand. But with rents flattening and maintenance fees eating profits, they're dumping units. Nearly 35% of listings show recent price cuts, some as steep as $50,000. The downtown condo scene is particularly hard hit. Projects once touted as catalysts for revitalization are now offering concessions just to fill units, while waterfront condos along the St. Johns River have seen values fall by 25%. Even newer complexes are struggling because lenders are pulling back from financing older buildings that don't meet Florida's tougher inspection standards, making cash buyers the only pool left. For Jacksonville, the crash is dramatic because it shatters the belief that this market was safe. Condo owners who expected steady appreciation are instead watching their investments erode like sand, slipping through their fingers. Number 4. West Palm Beach. West Palm Beach Long, the playground of snowbirds and retirees, is now a stage for one of Florida's condo market's ugliest reversals. Prices that soared past $400,000 for a median condo in 2022 have slipped closer to $300,000, a 25% plunge in less than 2 years. Some luxury buildings downtown are seeing even harsher cuts, with $1 million units discounted by $250,000 and still struggling to sell. Inventory has climbed nearly 80% year over year, with more than 2,500 active listings crowding the market. The financial strain is crushing. Insurance costs have tripled since 2020, pushing premiums in coastal towers past $12,000 annually. HOA fees that were once $500 a month are now edging toward $1,000 as buildings scramble to fund reserves required under Florida's new condo safety laws. Add in surprise assessments of $20,000 to $40,000 per unit for structural repairs, and many retirees are simply walking away, unable to keep up. The rental story isn't saving the market either. Investors who hoped Palm Beach County's luxury branding would guarantee steady Airbnb demand are facing reality. Occupancy rates have tumbled below 50%, while nightly rates are down 15%. What once produced $4,000 a month in rental income now barely covers half the ownership costs. Lenders are tightening too, refusing to finance units in buildings with deferred maintenance, further choking demand. Even more shocking is how quickly sentiment turned. Just 2 years ago, West Palm was touted as the new Miami for professionals and retirees alike. Today, open houses draw little traffic, and desperate sellers slash prices weekly. For a city built on the promise of wealth and sunshine, the condo crash has cast a long shadow, showing even glamour markets aren't immune to Florida's housing storm. Number 3. Tampa. Tampa's condo market, once one of Florida's brightest stars, is collapsing in a way few predicted. In 2022, the median condo price here peaked at $310,000, but by mid-2025, it has slid closer to $230,000, a staggering 25% decline. Some waterfront high-rises along Bayshore Boulevard are down even more, with units that once sold for $600,000 now struggling to fetch $400,000. Inventory has ballooned by 85% year over year, with nearly 4,000 active condo listings, the highest level since the Great Recession. The financial pressure is immense. HOA fees that averaged $450 a month just 3 years ago are now $800 to $1,000 in many complexes, driven higher by reserve requirements and mandatory structural repairs. Insurance costs are equally crippling. Premiums for units near the Bay that were $3,200 annually in 2020 now exceed $9,500. Combined, these costs push monthly ownership expenses for even a modest 2-bedroom condo above $2,400. Unaffordable in a city where median household income hovers around $70,000. Investors, who once poured into Tampa for short-term rental profits, are bailing out fast. Occupancy rates for Airbnbs have dropped to 48%, with nightly rates 20% lower than their 2022 highs. Properties that once promised $3,500 in monthly income now struggle to generate $1,800, leaving owners bleeding cash. Nearly 40% of condo listings in Tampa show recent price reductions, some slashed by as much as $75,000. Even Tampa's booming economy can't save the condo market from itself. Job growth in tech, healthcare, and logistics remains solid, but buyers are wary of hidden costs and the risk of sudden special assessments that can run $10,000 to $25,000 per unit. Developers who once bragged about luxury towers now offer massive incentives just to keep projects alive. For Tampa, the shocking part is not just the drop, it's the loss of confidence. In a city that felt unstoppable, the condo crash has become a rude awakening that the boom years are truly over. Number 2. Crest View. Crest View, a small panhandle city better known for its military ties than luxury condos, has become an unlikely epicenter of Florida's condo collapse. The numbers here are jaw-dropping. The median condo price has fallen from $210,000 in 2022 to barely $145,000 today, a catastrophic minus 32% decline. Inventory has doubled in just 12 months, with more than 500 units listed in a market that typically carries fewer than 250. Sellers slash prices almost weekly, with reductions averaging $25,000 to $30,000 to lure hesitant buyers. Affordability is shattered. At today's mortgage rates, even a cheap $145,000 condo with $350 HOA fees and $3,200 annual insurance adds up to nearly $1,500 in monthly costs. For a city where the median household income is $62,000, that stretches budgets past the breaking point. Many local buyers simply can't qualify, leaving condos to sit idle. The investor side is even uglier. Many military contractors and out-of-state speculators jumped in during the pandemic, betting on rental demand. But rental yields are now dismal. Long-term rents average $1,150 a month, barely enough to cover costs. With interest in short-term rentals nearly non-existent, investors are dumping units at a loss. Nearly 45% of listings in Crest View show price cuts, among the highest percentages in the state. What makes Crest View's crash especially dramatic is how sudden it's been. In 2021, this market was one of Florida's hidden gems, attracting buyers fleeing pricier metros. But the mix of rising ownership costs, stagnant wages, and overbuilding has turned the dream sour. For many owners, the nightmare isn't just falling prices, it's being stuck with condos no one seems to want, no matter how low the price goes. Number 1. Deltona. Deltona, wedged between Orlando and Daytona Beach, is now ground zero for Florida's condo implosion. The city has suffered the steepest recorded condo price drop in the state, a median decline of negative 32.2% year-over-year. Prices that peaked at $240,000 in 2022 are now closer to $160,000, erasing years of equity in just 24 months. Inventory has exploded by 90% year-over-year, with more than 1,200 condo listings clogging a market that historically handled fewer than 600. The cost of ownership is strangling residents. HOAs that once billed $300 monthly now demand $600 to $800 as buildings scramble to comply with Florida's new inspection and reserve rules. Insurance premiums have tripled, climbing from $2,000 annually in 2020 to over $6,500. Add mortgage payments, and a modest Deltona condo now eats more than $2,000 monthly, utterly unsustainable in a city where median household income is only $58,000. Investors have abandoned Deltona almost completely. Short-term rental demand never lived up to hype, and long-term rents averaging just $1,200 can't cover ownership costs. Nearly 50% of condo listings in Deltona show price cuts, many of them slashed by $40,000 or more. Entire complexes are struggling with vacancies, and desperate sellers are offering cash concessions just to offload units. The psychological shift is perhaps the most dramatic. Deltona was marketed as an affordable gateway city during the pandemic boom, attracting middle-class buyers priced out of Orlando. Today, it's a cautionary tale of how fast affordability can crumble. Families who stretched their savings to buy in 2021 are now stuck underwater, owing more than their condos are worth. For Deltona, the crash isn't just numbers on paper. It's the destruction of trust in Florida's condo dream, and it's unfolding in real time with no bottom in sight.